Kick this off with what we need to know. I mean, what markets are set up like. So basically, last Friday, we ended on a very, very strong note. Super strong note. By the way, for the week, markets were up between 2 and 3%, depending on what index you were looking at. So there was no lack of momentum, right? Momentum is the name of the game, has been for the last, especially a few days or so, once we crossed that previous all-time high. I mean, from 900, which was the previous all-time high, round about there, to where we are now, which is 19,200, we've galloped, not risen. So the Nifty, by the way, is also closed above the medium-term resistance level. This is nothing but, I mean, if you join a straight line from the 2021 highs to the December 2022 highs, on Friday, we basically went above that level as well. So it puts us technically in a pretty good space. Technicians, chartists like all-time highs because it kind of lets them project because there is no real reference point then. You can project higher based on previous advances, but really blue skies in that sense. Global cues are supportive as well. So the S&P was up about 1.25%. The Nasdaq was up 1.5%. This is Friday's session, so there's no lack of pace in the U.S. as well. The important data point was the U.S. core PCE number, and that slowed down to about 0.315% advance month on month. But, I mean, you look at a plethora of what economists, global economists, etc., are saying. No one is really banking on this to say that maybe things are turning down. The previous couple of data points have all actually been very strong. So, you know, it is what it is. We'll, I guess, get more data. For example, this week we'll get ISM manufacturing. On Friday, we get the jobs data and more. U.S. 10-year yield, it was unchanged. I mean, it did not budge. 3.84. The dollar index came off a little bit, so just under 103 on Friday. By the way, there's a holiday in the U.S., so expect at least the start to be a little subdued. Tuesday is a holiday, so, you know, many would be out for the kind of a long weekend. So price action out of the U.S. later today and, of course, tomorrow, which is a holiday, will be slow. Just to come back and put levels to where we are and where we might be headed. On the Nifty, the upper end of the rising channel, because it's a rising channel, the levels also change, now stands at 19,315. We left off almost at 19,200, so that's about 100, 120 points out from here. That will be the near-term resistance for the market. So that's point number one. The very short term, I mean, very short term kind of supports, if you want to take a look at it. I don't usually talk about the 10-day, but because the 20-day is a little far out, the 10-day is at 18,835, the 20-day is at 18,738. These are short-term downside support levels to work with. Bank Nifty closed decisively above its previous high of 44,499, a level we've kind of spoken about for weeks in end, but it did finally happen in a conclusive way on Friday. In the near term, the next upside level for the Nifty Bank comes in at 45,645. So we'll see how long it takes for the Nifty Bank, because the Nifty Bank caught momentum much later after the Nifty, once it kind of decisively, moved past the 20-day moving average. So, maybe there is a little bit more here on the Nifty Bank as compared to the Nifty. We'll see. Supports come in at the 20-day moving average of 43,965 and then the 40-day exponential moving average of 43,636. These are near-term, short-term support levels to watch out for. I just want to say one thing. We're also, by the way, now going to start talking about earnings, right, for the first quarter, April to June quarter. And first off the block will be IT services. And Rima, with IT services, over the weekend, we've seen so many downgrades, right? I mean, so many brokers pointing out that be prepared for lower earnings, etc., etc., etc. And that's a very important 30-35% constituent of the Nifty. So if that part of the market starts to lag a little bit, I mean, that perhaps slows down what happens on the index as well.
Yes.